What's up, everybody? Billy here from Storm Trades. Time for another trade recap. This time, let's go through my gold futures short trade from Tuesday, June 10th. This day, for gold in particular, was interesting because with regards to my high time frame analysis prior to the trading session, because as you'll see, I was clearly bearish on the daily. Yet when I initially looked at my chart, just kind of studying the 1 hour narrative on the 1 hour chart, initially I saw a bullish narrative, and so we'll just sort of take you through how I switched that and what I used to justify that. And on this particular day, the high time frame bias from the daily bias actually helped frame the trade that I ended up winning. So let's get right after it. All right, starting on the daily. I always talk about how I'm looking for price action on the daily that sticks out to me. Okay, so it needs to scream bullish or bearish, right? First things first, I'll mark out the previous daily low, previous daily high. I'll run a fib from the previous daily candle just to sort of see where we are currently trading as I'm looking at the market. And I also want to mark out any internal and external range liquidity, okay? Because the market books price from internal to external and from external to internal, okay? That's all it's ever doing. So I want to see where we are in relation to any current internal range liquidity, and is there any recent external range liquidity that we've taken or swept or closed strongly through. Let's just see how we build the narrative here. And the first things we'll take notice of is when I started looking at the charts this Tuesday morning, I noticed we were inside of a bearish daily fair value gap. Okay, we short from bearish daily fair value gaps. Now, I'm looking at this and I'm seeing that we're currently through it a little bit, but that can easily be a wick. And many times it is just a wick when the day is over, right? So we got to, that could be right now, this could be the manipulation through London, and then we'll have a New York reversal. So I'm not really concerned that it's going through it right now, but I am concerned that we have engaged a bearish daily fair value gap. Now, I also want to mark out any external range liquidity that we might have recently swept, and we did. We recently swept a daily swing high, and then from there we got two very bearish daily candles. We attempted to make we're attempting to make a retracement right now, but it makes total sense why to me at least, why I was bearish on this day and looking for lower prices. Now, that's it. There's nothing else to go through. I don't need to start second guessing myself. I understand why I'm looking at price the way I am at this point. I want to move down to the hourly and start to gather the narrative that I need to try and see what, how I'm going to get on sides with the hourly market structure. All right. So let's pull up the hourly chart. And right away, I'm also looking at what is jumping out at me from the hourly. Well, we had this clear downtrend here, and I would argue we had a change in the state of delivery on Monday. Okay, we had a breakdown here, maybe a little retracement, and then once again we had another change in the state of delivery right here. So I'm going to mark that out, and we're confirming. I am confirming that this is a change in the state of delivery by the presence of a fair value gap, right? So we have a number of them here actually. So I'm just going to mark this one right here. Both of these fair value gaps were left untouched, unmitigated, which to me showed that price wanted to go higher, right? And at this point, though, I just want to make note, right? I'm now bearish on the daily, and as looking at the hourly market structure, I'm bullish. However, bullish to what point, right? So we're always looking to follow price to realistic targets. Well, technically, we've already reached the target, right? So this move up in creating this change in the state of delivery brought us into the daily bearish fair value gap. Okay, so I'm starting to understand that price may turn around here. I also want to make note that we are inside currently we're inside of a bearish hourly fair value gap, and we have swept an hourly swing high. So we have swept an hourly swing high inside of a bearish hourly fair value gap, while we're also inside of a bearish daily fair value gap. So it matters if we've already hit a target or not, right? So obviously, I was still looking at price as bullish, but at this point, this meets all the requirements that I need for a bearish model to appear. I'm inside of a bearish POI. I've swept some liquidity inside of that. So I was prepared at this point to see lower prices, at least to come down here to these unmitigated fair value gaps, right? So I was watching for some sort of a sweep on the M5 time frame and a displacement through a change in state of delivery, and that's exactly what we got. So I'm going to pull down to the M5, and this is our hourly swing inside of this bearish hourly fair value gap, right? So I am watching price, and at this point we actually get a sweep, right? So you can see it right here. We have a sweep right there, and we could keep trending higher from here. But I'm marking out, once I'm on my M5 time frame, I'm marking out each sweep and any change in state of delivery that occurs. I'm basically just watching price intensely, right? So I have a sweep there, and whenever I have a sweep, I mark out in this case, the up close candles that took the liquidity, marking that as a change in the state of delivery. I would want to see a move down below that. At this point, I can also mark out that this would be a breaker block, okay? And we don't have a fair value gap there, but I'll just mark this out just so I can watch price and see how we react. And at this point right here, we have a close below the change in state of delivery and below the breaker. Now, we haven't solidified that it's a unicorn yet, but as soon as we do, right, we know that we have a unicorn, right? As soon as we have a bearish M5 fair value gap inside of the breaker, I entered right here at the close of this candle, and I was looking to trade to the relative equal lows here, which was about 2R, right? And the reason was we have a pretty large fair value gap here, so this is a nice liquidity pool, and I was close enough here to the swing high. I like the risk to reward. I like that we swept the hourly swing high. We're inside of a bearish hourly fair value gap, and still potentially reacting out of the daily fair value gap, right? So I'm going to move. Let me go back here, show where I got in. So right here, sold a contract, stop above the breaker, take profit at these relatively equal lows. Okay, ended up being about 1.9. I traded this on the micro contract, right? So on the micro and the mini, they will mirror themselves. They will mirror each other, but you will find many times that you won't get the exact entry. So let's move price forward here. At this point, we've established that this was in fact a unicorn, okay? And this trade actually went fairly quick down to take profit. Now, this was just a good example of a day where the daily bias really helped frame the trade. I could have maintained a bullish narrative on the hourly. However, the fact that we made a sweep inside of a hourly fair value gap inside of the daily gave me enough confidence that that there was a trade at least down into the unmitigated fair value gaps below. I don't need to go all the way down there, right? Look at this. The fair value gap's way down here. I don't need that. Let's see where price ended up going. right? So we ended up going down and testing the hourly fair value gap, right? There was good liquidity. All we needed with this little hit right up top. All right, guys, if you got anything out of this, you just enjoy going through trades like I do, learning from our mistakes, learning from what we did right. Please subscribe and throw a like. You guys have a great day. See you.